From Washington, this is the Macrocast, a podcast brought to you by Penta and Markets Policy Partners.
Good morning. It's Friday, February 10th, and you're listening to the Macrocast. I'm Megan Pennington, a partner here at Penta, and I'm joined as always by John Fagan of Markets Policy Partners. Hey, John, how are you?
Doing very well, Megan. It's great to have you as the host.
Well, I'm always thrilled to be here. Now, we're down one Markets Policy Partner today, but in his absence, we're really excited to welcome back our special guest, Lauren Smith. He's president of Skyline Policy Risk Group, where he offers guidance to his clients on policy risk, political strategy, and business development. Lauren is also an alum of the Department of Transportation, so I'm really excited for us to dive into a conversation on federal infrastructure investments. Lauren, I don't know if I mentioned to you, but once upon a time, I worked on the Senate Environment and Public Works Committee. So these are issues that are
Awesome.
Close to my heart, and I'm excited to dive in. You know, this is an interesting time in infrastructure in America because lawmakers and business leaders alike were long calling for a significant investment in our infrastructure to improve our competitiveness around the globe. And today, we have two landmark bills with the Infrastructure Investment and Jobs Act and the Inflation Reduction Act. And I think that will result in an investment of nearly $700 billion in infrastructure, research activities and other related programs, but really a tremendous shot in the arm, if you will, in our country's infrastructure. So I would love to hear a little bit about how you think these investments are going to roll out and what do you think the impact will be on, competitiveness in our economy broadly?
Megan, I guess the big question is how much of it is focused directly on freight infrastructure. I think that's really what industry has been specifically asking for. And it's a really interesting lead up over the past decade or so. A lot of discussion of focusing on freight infrastructure and spending there. And in the FAST Act, which was the previous infrastructure bill signed into law in 2015 under President Obama, the Department of Transportation was basically ordered to undertake, what is the strategic plan that we should be looking at for freight infrastructure, the key arteries, the key nodes, the connecting points between different modes of transportation, areas where the federal government as a whole should be focusing to strengthen freight. And so in the Infrastructure Investment and Jobs Act, that was sort of the carrying through of that effort to focus that. Another interesting feature of the IIJA was the significant increase in the competitive grant program. So specific grant programs, RAISE and infra had already existed. These are individually $1 billion a year pots of money where the department competes out across the country for key programs. To that, the Congress added what became the MEGA program, which very large projects such as the Gateway projects in New York and the Brent Spence Bridge connecting Ohio and Kentucky, where President Biden was at just a few weeks ago in a rare appearance in public with Senator Mitch McConnell. That was interesting. But so you have the mega grants. You also have a new rural grant program. And so there's a lot of attention on, are we focusing on making sure that freight infrastructure, so the ports, the major highway arteries, things like that are getting focused on. And so I think that there's a lot of optimism there. A lot of big truck parking projects that we've seen over the past few months, which is really important. There's occasionally on the interstate, you'll see trucks backed out of service plazas onto the roadways because there's just not enough parking. It's been a huge problem. And it's also a safety issue too. If you're literally backed out onto the freeway, that's not a great quality of life thing for truckers. And of course, the trucking industry is like, we need more truckers, we need more people. And so you say, come work for a trucking company. By the way, we're going to make you park on the side of the road if you want to, make it inside for a bite of food or, a bathroom break or something. So that's all something that I think, I'm optimistic about over the next few years. I think we're going to be seeing some of these projects get carried through to fruition.
Well, and I think it's interesting because I don't know that your average consumer has a good grasp on how how difficult it can be to move freight around this country, and how, buying something at a Walgreens in California sometimes means that that a parcel on a ship in the port of Baltimore, or on a barge in the port of Baltimore, has to make it all the way across the country in some sort of vehicle. It's not being flown there. So maybe, how have businesses been articulating the need to, or have they, in a laser focused way, been articulating the need to really shore up this freight movement system, and what it'll take? I mean, it's I guess it's easy to understand in the 50,000 foot view, but as you're describing, it's bridges and parking spots for trucks. Like, do you think there is enough awareness, I guess, among the business leaders, and like in consultation with the government who will implement the law, to kind of make the upgrades that we need?
That I think is a little bit of a question mark. I mean, is there going to be a real laser focus on that? The industry, I think, has said, like, look, this is really critical, and so these are competitive grant programs. So they really want them to be focused on that. There was an article in Freight Waves a couple of weeks ago about industry leaders being concerned that there's not enough focus, and saying, like, look, we really want you to dial it up a little bit, specifically on those freight projects. But you make an interesting point. Everything you eat and everything you wear got there on a truck. All the modes of transportation are important,
right.
But trucking is absolutely vital. It is absolutely 100% critical. Everything you eat, everything you wear, like, unless you grew it in your own backyard,
sure,
it got there on a truck, either way by delivering to your house, or every supermarket, everything is brought there by truck. So that's critical.
Yeah. I think sometimes for many of us that do not think about the infrastructure system on a daily basis, there's an idea like, oh, that just flies on a plane somewhere and lands somewhere close to me, and then they maybe drive it to the local store where I want to go buy it. But I think during COVID, and John, I know we've talked a lot on the show about supply chain disruptions during COVID. It was hard to get things because people were having trouble manufacturing them and producing them. But then when they could even get to like their first destination, say domestically here in the United States, it would be difficult to move them around the country. So, I think anybody who's an expert on the topic would say this is absolutely critical to American industry and business's ability to thrive here.
Yeah, absolutely. And, I think that you wouldn't want to wish to the pandemic, on anybody, but there are some silver linings, and the focus on some of this back to basics, where we go back and invest in the circulatory system of our country, and address some of the weaknesses and resiliency issues that came up. So, it's a learning experience, and Lauren, I want to go back to, the discussion about the investments, this focus on the basics, the bridges, the rail lines, but, trucking, which is so fundamental. What about the balance that the legislation has tried to strike between basically capitalizing improvements in the legacy systems, but also looking forward to those innovations, the new technologies that can be coming in, and we've autonomous trucking and some of these others. How is the legislation balanced in that way? Do you think that they've struck the right balance?
I think there's a good amount of forward looking in the bill. What's interesting is, when you think about one of the areas like automated vehicles, there's definitely a lot of focus by the regulators, but it's a little bit of a moving target, since I think the expectations for autonomous systems have actually trended downwards over the past couple of years, and I think the administration in particular is taking a very judicious, methodical, like, let's start with mandating automatic emergency braking. That is an autonomous system, a subsystem within vehicle operations, and so they're focused on that. They're focused on studying, doing a lot of how these different systems work, and gathering data about how these systems work. Like asking Tesla questions about how the autopilot system works, and to some extent also how it's marketed for broader consumption. I think that other future-looking elements include resiliency. when we think about climate policy, arguably the top policy sort of thematic priority of the administration. In infrastructure terms, resiliency is the term that we use for sort of up-armoring bridges and different elements of our transportation infrastructure to withstand changes in the climate. And so I think that the resiliency is definitely an important part of the infrastructure bill, and I think that that's going to be an element that's important to watch. I think that in terms of maintaining existing roadways and roadway capacity, and where appropriate, improving roadway capacity, I think that's going to be a big debate. Do you focus more on transit and passenger rail and things like that? That's less of a question for freight, which again is mostly trucks on the road. But to the extent that you also do have rail freight, that's very important too. About 30% of all freight that moves.
Another thing I'd love to dive into a little bit is permitting reform. Sometimes can seem like a little, it can sound to the uninitiated like it is a boring thing that government folks talk about, but actually it plays such an important role in these infrastructure projects becoming actually shovel ready. It's a long road from the president signing a bill into law in the White House and the wonderful signing ceremony. From that to shovels going into dirt is there's a big process that happens in the middle there. Lauren, maybe you can tell us a little bit about how permitting reform would actually maybe speed up our ability to get shovels in the ground in some of these projects. And as we've just discussed, projects that are incredibly important to our economy and, a post-COVID recovery.
One of my favorite topics, permitting reform. First of all, the U.S. is in a very tough place with permitting. We are the hardest country in the world in which to build stuff. Some of that comes naturally from being a developed country, where you have lots of people living everywhere, and all the land has basically been purchased and is owned by someone. And because again we're a developed sort of affluent country in comparative historical terms, both historically and compared to all the other countries in the world. The people that own the land tend to be more politically influential. And so it's just harder to do anything, naturally. However, even among developed countries, the US has a harder time building things than, say, in Europe, which would be, fairly comparable. That is due to problems in the process. And that's where permitting reform comes in. The US just has an unusually bureaucratic, cumbersome process when it comes to permitting reform, where you literally have dozens of checkpoints where if someone doesn't like you for whatever reason, they can throw a flag into the process. It's just too many. It's just too many spots where there's unnecessary friction in the system. Some friction is appropriate. You have to do your testing. You have to do your environmental impact statement. You have to give some sort of local involvement in the decision making. But that's but those should be those should be specific decision points where you make the decision and then the decision's made. And you should have several of them. Like there should be an appropriate amount of friction for making a decision on building an infrastructure project. In the U.S., we just have too much friction in our process. What's interesting now, and what's encouraging, is that we have sort of a bipartisan interest, or more bipartisan interest in permitting reform. What was left out of the Inflation Reduction Act last year was a side agreement with Senator Joe Manchin, Senator Chuck Schumer, with President Biden also involved on taking a look at improving permitting for energy infrastructure as well as transportation infrastructure. And so Manchin has his proposal that he's working on. At the same time, the Republicans have a proposal from Senator Shelley Moore Capito, which is funny. You have the two West Virginia senators with their own dueling process reform, permitting reform proposals. And I think that's one of the things that I'm hoping can get some life this year in Congress, because I think that would be very encouraging for our overall development. And when you think about things like electric vehicles and the transition to electric vehicles, for the U.S. to have a really robust supply chain with the critical minerals that feed into the batteries, which are the core meat of this electric vehicle transition, it is important to have more manufacturing in the U.S., more production capacity. We don't want to be importing all of it. We're going to be importing a lot of it. But, just to be looking at that and the other elements of the energy infrastructure system that we need, it's important to be able to actually do the things you want to do. It's also important for siting of power infrastructure when you're thinking about creating a new solar farm or a wind farm. First of all, those things need to be built, and second of all, you have to have transmission lines. You build yourself a nice wind farm somewhere. It doesn't do a lot of good if you can't build a transmission line that connects it to where people actually live to use the power. And so having a process that works appropriately, again, as a developed country, it's always going to be a little bit harder than it was before. But, it definitely seems to be the case, or it definitely is the case, that the U.S.'s system lags behind that of other developed countries. And that's something that, hopefully Congress will get in gear and work a little bit harder on this year.
I'm curious, Lauren, how much you think federal legislation is going to be helpful for the permitting issues at the state and local? I mean, this goes down to the very, and to almost the zip code kind of level of bureaucracy. And how much can they solve really at the federal level?
Well, I mean, yeah, definitely. When we talk about being a developed country, a lot of that comes down to NIMBYism and just local level affairs. Yeah, part of the complexity is you have about a dozen and a half federal agencies that can get involved, like large, like cabinet level federal agencies that can get involved in a particular, a given infrastructure project. But then you have your state level agencies, and you even have local agencies. In some cases, there are local levels of government involved in a lot of these cases. I think, in part, the feds, lead by example. A state will often mimic processes put in place at the federal level. So, for example, one of the processes that I worked on when I was in government was called One Federal Decision. And because you have more than a dozen federal agencies and different bureaucracies, even if they share the same policy priorities, they tend to fight over turf. And so part of the problem that develops is you have one agency that says, okay, this is going to be about 18 months. We can get through our review and then we'll be good. And then the second agency says, well, we're just as important and we're just as involved here. So we will also need our own 18-month review. And these are done sequentially, which is why it can take, unbelievable amounts of time to get these things through. And so the One Federal Decision concept is an idea that at a whole of government level, one agency is created as the lead agency for a specific project. For this specific project, you call it widening I-270 in Maryland, this agency, the EPA, will be in charge. Actually, it would probably be DOT, but like agency A is in charge, and agency B, C, D, and E, who have a legitimate interest in there. For this specific project, you are appointed to be cooperating agencies. And then so those agencies basically are strongly encouraged to basically defer to the conclusion reached by agency A. That's going to take some focused leadership at the federal level, but One Federal Decision or components of it were included in the IIJA. So that's important. So I would say the feds need to finish promulgating that theory of or that structure of a one federal decision approach to infrastructure permitting. And then you get states to follow along, you get local governments to follow along. To some extent, you simply aren't going to, you're never going to get, out of having local communities have a say in things. And we don't really want to. I mean, I'd like to know if something was going through my literal backyard and what, to be able to express an opinion on it. So I think to some extent, again, being a developed country, you have friction with permit, but we could probably move things up by, we could improve the process by, maybe 25%, which could mean, tens of billions of dollars to the economy, in a pretty short period of time.
That's super interesting, Lauren. Thank you. Let's take a quick break, and we come back, maybe shift a little bit and talk about the debt ceiling and some of the Biden administration on trade. I'm Megan Pennington. I'm your host today. You're listening to the Macrocast. We'll be right back.
Penta is the world's first comprehensive stakeholder solutions firm. We are a one-stop shop for the intelligence and strategy leaders need to assess a company's reputation and make decisions that improve their positioning. As executives in the C-suite must account for a growing set of engaged stakeholders, all with distinct, fast-changing demands, Penta provides real-time intelligence and strategy solutions. We work with clients solving complex global challenges across a variety of industries. Our clients span technology, financial services, energy, healthcare, and more. To learn more about how Penta can support your company, check out our website at pentagroup.co, our Twitter at pentagrp, or find us on LinkedIn at Penta Group.
Welcome back to the Macrocast. I'm Megan Pennington, a partner here at Penta, and I'm back with John and Lauren. So, guys, this week we had the State of the Union on Tuesday. I think there was, some talk of the debt ceiling. I think the president's posture in the speech was interesting. I thought the president did well. He felt comfortable. He kind of felt like he was in his zone and, making what I think are genuine calls for bipartisanship, but also reminding the country that there are some important things we have to do, one of which being the debt ceiling. So would love to hear what you all think about, how we think this whole thing will play out. John's heard me give my my outlook, which is I think it's going to be a mess. But maybe John, let's start with you. Are the markets responding at all to President Biden kind of and the debt ceiling struggle that's on the horizon, or is this still kind of like that's political news that isn't really affecting dollars and cents quite yet?
Well, it's definitely in the minds of market participants. It's certainly a key factor in their outlook. There's no question about that. This episode has been flagged as a much more contentious one than in the past. Some of the more automatic or less contested debt ceiling raises in the past have maybe lulled some market participants into a sense of complacency. But the amount of analysis that sort of analogizes this episode to the 2011 very volatility-inducing downgrade resulting knockdown drag out. And so market participants,
which I like to remind people that you were at the Treasury Department then. So
in 2011, I was not. Fortunately,
oh wait,
I was
wasn't
a hedge
it?
fund.
Oh no, did I get it wrong? Wasn't there a time we had Bob Donor on? I thought there was one time where you guys were both part of the mix.
Oh yeah, it was probably one of the lesser ones. I was still in Connecticut in 2011. But
just kidding. I interrupted you for no good reason. But anyway.
Yeah, typically the way that market participants respond to, this, what they deem as a low probability but high impact event is you just have a really hard time pricing it in, particularly when it's within the investable time horizon being in sort of the late spring, early summer, but it's still a few months away. So it's hard to imagine investors really in large, significant numbers and readjusting their portfolios to account for this kind of risk. Where you do see it is you do see it in bill yields. This is very traditional, like even when the debt ceiling wasn't likely to be that big an issue, you see what is essentially looks like a kink in the bill yield curve. 4 months from now, or whatever the deemed around the danger zone of a default, any bills that are maturing in that kind of couple of month time frame tend to come with a higher yield, which means there's less demand for them, and we're seeing evidence of that. This one would assume that this is going to be a little bit more of a pronounced kink, and the idea is essentially that nobody thinks that a default is really coming, but all else being equal, why? On the margin, you're going to make decisions that take you away from that kind of maturity. So that's usually all we see until, if there is a big, huge problem and a fight and a sense that Treasury is really running out of their extraordinary measures, well, then you would see a more generalized kind of risk off flight to safe havens, one would assume.
Well, now, on Tuesday night, we heard the president say, nearly 25% of the entire national debt took 200 years to accumulate. He talked about how others before him have added much to the federal debt, and that Congress, lifted the debt ceiling 3 times without preconditions or crisis, he said. So, Lauren, I think once upon a time you worked on the Hill. What do you think is going to happen? This is a new, to kind of recap what I said a few weeks ago, I think this fight is going to be contentious because Kevin McCarthy has a broad range of characters that he has to keep in line. And he has, his hold on the speakership, I think maybe is tenuous in some ways. So tell me, what do you think is going to happen?
Well, I think the bottom line is what John said. There's not going to be a default, and that's the most important bottom line. I'm relatively optimistic. I mean, I was a research analyst during the 2011 episode, and yes, it was a pinch point for the markets. But it was sort of but that was sort of the culmination of several years of, starting in 2008 with the financial crisis and with the passage of TARP. There was several years of like $1 trillion deficits, and there was a lot of political intensity around spending and the deficits. What I think is interesting is that today, even though the national debt has gone from 14 trillion at the time to 31 trillion today, the spending issue, I think, is a little less. It's not as top of the agenda. I mean, it's an important issue, but it's not as top of the agenda as some of the other issues that they're fighting over in Congress. I'd really like to see them, say, hey, let's do a Manchin Capito permitting reform, and we'll pair that with a debt ceiling. That would be awesome. But I think.
That would be nice. And along with
that might be too creative. That might be too creative.
Along with that, maybe some legislation on pre-development and I don't know, like extending, renewable tax credits, all of those things, that's always on the top of people's minds.
Yeah. But I don't think it'll be a clean, what they call a clean debt ceiling, meaning just like a debt ceiling increase. That's one line bill. They pass it, right. Debt ceiling's raised, and that's the end of the story. I don't think we'll see that. I think you mentioned, the situation that Speaker McCarthy is in. I think he does. I think he's got to navigate that, and so I think that he's got to. He needs to negotiate something. At the same time, I think the Senate is probably not at a spot, I think, where you have 60 senators that want a clean increase at this point. I think you probably have, some interest there in having, why don't we take this as a leverage point for some spending reforms. The one point about the State of the Union that I thought I personally thought was a little bit of a head scratcher was the Medicare and Social Security stuff. I mean, President Biden said we will absolutely not cut Medicare and Social Security, and Kevin McCarthy said, "Oh, okay, yeah, no, agreed, yeah. Right here with you." So I like when it comes time for negotiating on the debt ceiling, I can imagine Biden coming back in 3 months and saying we're definitely not doing that, and McCarthy saying, "Okay, let's move on."
Yeah,
and so, so they'll look at other things, other spending programs, and I think if you go back to 2011. And I don't think it'll be as sweeping as the Budget Control Act of 2011. I think it'll be somewhere between zero and what ultimately I think was 2.2 trillion off of the 10-year budget, and I think it'll be something less than that. Certainly given the growth in other forms of the payments on the interest, the entitlements. Defense. I think, for one thing, I think when you think about the Republican mentality, you have Republicans that are like, we got to increase defense spending, and if that means we cut a deal to increase other forms of spending, that's okay. And then you have other Republicans that are like, $31 trillion is going to bury us, and so we've got to do something about that, even if it means we don't grow the defense budget this year. And so that sort of like balance between those two mentalities, I think is a key driver of what ultimately results. But I think probably we'll see some spending cuts, probably nothing too too imaginative, but maybe like they do like a 1% reduction in future outlays in the 10-year budget window, something like that. And I think Biden was at the heart of the negotiations that happened during the Obama administration. John mentioned he wasn't at Treasury during the 2011 Budget Control Act fight, and then there was the fiscal cliff negotiations at the end of 2012 that actually passed in the wee hours of January 1, 2013 on sort of the final disposition of the Bush tax cuts. And then John was at the Treasury Department during the 2015 negotiations, which did include a debt ceiling increase, which I think ended up being a clean one. But they also did at the same time, they did a budget, and they did the previous infrastructure bill, the FAST Act. So there were a lot of those things, and Biden was very much when sort of President Obama's like, hey Joe, go talk to Mitch and see what we can work out, with the Senate. I think Biden talking to both McCarthy and McConnell is going to be really critical. And obviously, he's got Chuck Schumer on his side too. And Schumer likes to cut deals. So I think, in general, we're not going to default, but more than that, I think, if you look at these people that are at the table, I think that these are all people that are interested in cutting deals. Again, McCarthy under a little bit of different kind of pressure, but he's not like a super inflexible sort of guy. I mean, I think he can sit down at a table pretty amicably with the president and find out something that they can both live with.
Yeah. I want to pivot slightly just because I think while we have you here, Lauren, it'll be interesting to talk about, the Biden administration on trade, especially with respect to critical minerals, because I know that has, an important supply chain aspect to electric vehicles, which I think you have some expertise on. Talk to us about where you think the administration is, in critical minerals, of course, overseas relationships as they relate to chips. What do you think the administration is thinking and doing?
One of my favorite topics. There's a really interesting through line over the past few years from the end of the Obama administration, including the Trump administration, and now with the Biden administration, on how they're approaching trade and the competition with China. And it's when we, fast forward 10 years from now and sort of look back on this era, we're seeing the U.S. sort of have this strategic shift. And from the Biden administration standpoint, because we're doing this big, shift into electric vehicles, we really need to, it really puts the fine point on needing to increase our industrial base capacity in the U.S. Now, I think because of the permitting issues, there's sort of a, we'd really like to increase, the industrial base in the U.S. and manufacturing. That's a sort of would like to do, but the absolutely must have is to secure our global supply chains. And so whether or not we actually make it in the U.S., given our permitting challenges, or we do the nearshoring, say with Mexico and our friends in Latin America, or what they call friendshoring in places like Australia or in the Democratic Republic of the Congo. I think the administration, the Secretary of State was in Africa just a few weeks back, talking about, or I guess it was a couple months ago at this point, but talking about our eagerness to work with countries there, and with our strategic goal being to get access to those critical minerals to shore up our access to what is currently an 80+%. So more than 80% of the critical mineral supply chain is dominated by China, and not just the harvesting of materials, but really the refining of elements like lithium, like that is overwhelmingly dominated by China. And so the strategic imperative of the U.S. is to figure out how we can get access to those critical minerals, not through China, basically. And again, we'd like to do that here. And there are things that the administration is doing, and that in general would be good policy things to do. to make it easier to do those things here domestically in the U.S. Like all of the chip manufacturing investments that are being made by different companies in Indiana, Arizona, other places, to improve that industrial base capacity in the U.S. But really, we have to have it, even if it's not literally made in the USA. But we just need it made in places where we feel a little bit better about like ongoing access to it. And so that's where Mexico, Australia, other places come in that we're going to be hopefully working very amicably with to secure our access.
Well, it's not, I think often when we talk about these things, we think of China, but it's important for all of us to remember the nearshoring and the friendly shoring, Mexico and Australia, those are going to be really important to us addressing, it's something that we have to figure out for us to, kind of compete and succeed in this global economy, and to have this like high tech manufacturing thrive in the United States. So hopefully we will keep this on the tops of our minds. Before we wrap up, John, should we just do quick Fed updates and earnings? You'll tell us what's going on with corporate earnings calls?
Yeah, to look at this week's calendar, it was a whole lot less consequential than the previous week, which included a Fed meeting, a European Central Bank meeting, a Bank of England meeting, and a non-farm payrolls, and like a murderer's row of corporate leaders doing results for fourth quarter. Apple, Amazon, Alphabet, Meta. It was really wild. This week was sort of and ultimately markets kind of resolved with all of these big things happening. Markets were pretty steady toward the end of the week, and it was really the non-farm payrolls that snuck up on financial markets. So coming into this week, the big theme was, to what extent are Treasury markets and futures markets going to price in a new level of Fed tightening because of this blowout jobs number. Now, there are even Fed officials who are sort of biased to be hawkish these days talked about how this could be kind of an anomaly. And it wouldn't be a big surprise if January was a little bit different in this era where you have a shortage of workers. So you're not necessarily laying people off in such great numbers after the holidays. Was that really the source of the big upside surprise? It's hard to say. But it certainly looks like an outlier when you look at a lot of the other data that came through. Still, the Treasury markets repriced. They put in essentially like one more rate hike for the Fed instead of one last one in March. The futures markets put another one on top of it in May, 25 basis points each to take rates above 5%. The market had been kind of doubting that the Fed could get that. But still, even as early as yesterday morning, as recently as yesterday morning, if you looked further out, they were still pricing in 2 25 basis point rate cuts, essentially these next two rate hikes being taken away by the end of the year from a Fed that's telling you whenever they have half a chance that they're going to keep rates higher for longer. And it really was over the course of trading yesterday that markets began to peer out at next week's data calendar, which includes consumer price index and producer price index and retail sales and industrial production, and certainly has the capacity, if those all surprise to the upside, to be to further the market trends that had been sparked by that large jobs number, essentially yields going up, essentially, beginning to align more with the Fed's mantra of higher for longer. And so this was the big move of the week. And we'll see how next week's data plays out. If everything's soft next week, we'll probably revert back to form. But if we do get those upside surprises in a few of the big inflation numbers and retail sales, for instance, kick back off again after some real significant weakness, then, you would see that essentially the market's beginning to hear what the Fed has been saying for months.
All right. Well, so we'll have to tune in next week, everybody, to get the big update and see what happens. John, of course, always great to be back with you. Thank you for having me. Lauren, thank you so much for joining us for your reprise role on the Macrocast. We hope you'll come back and talk to us soon.
Thank you very much.
All right, guys. Thank you, everyone, for listening to the Macrocast brought to you by Penta and Markets Policy Partners. We'd love for you to follow us on Twitter at Penta Group. That's PENTAGRP on Twitter. And then, of course, our Markets Policy Partners friends at Markets Policy. And, of course, keep up with us online at pentagroup.co. And please do subscribe to the Penta Podcast channel wherever you listen to your podcasts. Thanks again for tuning in and have a great weekend.
Thank you for listening to the Macrocast. Please remember to subscribe, rate, and share.